Welcome to the deep dive. Today, we're tackling a really interesting development in global finance,
Yeah?
the growing influence of Gulf Cooperation Council family offices, in tech investment.
Ah, right. That's a big one.
Stick with us because understanding this shift, well, it'll give you a valuable peek into where future tech opportunities might actually be brewing.
Absolutely. For you listening, this is really about grasping a significant power shift in global capital.
How so?
Well, while traditional venture capital, say in the West, faces some hurdles, think rising interest rates, geopolitics, making returns, harder to come by.
Yeah, it's been tougher.
We're seeing a new, pretty substantial player emerge.
And substantial feels like an understatement. We're talking about these family offices in the GCC managing huge private fortunes. Collectively, they're overseeing upwards of $3 trillion now. That kind of capital focusing on tech, that's a real turning point.
It is. So our goal in this deep dive is to understand exactly why these family offices are in such a unique position to become major tech investors.
Okay.
We'll explore their specific advantages, the kinds of tech they seem to be targeting, and how their investment strategies might be adapting.
And where are we getting our insights from today?
Yes. Our analysis today comes from the work of Dr. Pooyan Ghamari. He's a Swiss economist and the founder of ALEN Platform.
Got it. Okay, so let's dive into what makes these GCC family offices stand out. Dr. Ghamari points to some core strategic advantages, and the first one, it really struck me, is their long-term vision.
Yes, and what's fascinating here is how different their perspective is. It's not like the usual short-term pressures you see with traditional investors.
Like quarterly earnings and all that.
Exactly.
Yeah.
Or the limited lifespan of investment funds.
Yeah.
GCC family offices, they often operate with intergenerational goals. They're focused on building a lasting family legacy.
So their investment timelines, they're much longer.
Genuinely, they can stretch across decades.
Wow, that's almost a different ballgame entirely.
It really is.
This patient capital, as Dr. Ghamari calls it, it lets them consider funding truly groundbreaking stuff, doesn't it? Things that might take years, decades even to mature.
Precisely. We're talking about things like, say, nascent fusion energy research.
Okay.
Or efforts to create global internet via satellites, maybe highly personalized AI medicine that's still really early stage, or even advanced quantum encryption.
Things most VCs wouldn't touch.
Well, not with those timelines. The key insight here, for you listening, is that these GCC offices can fund truly transformative but maybe long gestating technologies that traditional VC, bound by shorter cycles, often just can't.
Right. And that patience, it must be huge for the startups themselves.
Oh, absolutely.
Yeah.
It provides crucial stability for these early stage, potentially high impact companies. They get the breathing room, the space to really innovate without that constant pressure for immediate profits.
So it's about nurturing the big breakthroughs.
Exactly. Nurturing fundamental breakthroughs, not just incremental tweaks. And as Dr. Ghamari points out, this isn't just a financial tactic. It's often deeply connected to a cultural approach, stewardship of wealth across generations.
Makes sense. Okay, the second key advantage Dr. Ghamari highlights is how closely these family offices align with their country's national strategic agendas. This isn't just about money then.
Not solely, no. It's interwoven with the broader future of their nations. If you look at the bigger picture, GCC governments have these incredibly ambitious national strategies.
Like Vision 2030 in Saudi.
Exactly. Saudi Arabia's Vision 2030, the UAE's Fourth Industrial Revolution Strategy, Qatar's National Vision 2030. These go way beyond just diversifying away from oil. They're blueprints for building innovation-led economies.
And this creates a really supportive environment, right? If a family office aligns its investments with these national visions, they get advantages.
Significant advantages, yes. They might gain access to things like regulatory sandboxes.
Okay, flexible rules for testing tech.
Environments designed to encourage rapid development. They also get opportunities to co-invest alongside powerful sovereign wealth funds, think Mubadala, ADQ, Saudi Arabia's PIF.
So big players.
Very big. Plus, they often receive priority engagement in strategically important sectors, green energy, fintech, health, digital infrastructure, you name it.
So it's this interesting synergy, like private capital and public ambition pushing each other forward.
That's a great way to put it. Success isn't just measured in financial returns anymore. It's also about national resilience, about the country's competitive standing globally.
That's a crucial point for you to understand then. It's a dynamic where private investment fuels national goals, which then creates more maybe de-risked opportunities for the private sector.
Precisely. It's a powerful feedback loop.
Okay. Advantage number 3, Dr. Ghamari talks about, is something he calls geoeconomic arbitrage. This has to do with their location.
Yes, their geographical positioning is key here. They're essentially at the crossroads.
Crossroads of what?
Think California's innovation engine, Asia's manufacturing might, and Africa's booming digital economies. They're kind of a natural bridge.
A bridge for capital, talent, markets.
All of the above.
Yeah.
And the core insight here is their unique bridging capability. They are positioned really to connect these diverse regions in ways that maybe Western investors often aren't, just due to geography or focus.
And unlike many Western investors who might be more regional, these GCC offices have this inherent access and cultural fluency across these different parts of the world.
Exactly. They have the potential to, say, invest in promising Indian startups.
Okay.
Adopt cutting-edge AI from perhaps Europe or Israel, and then use their established networks, their connections, to commercialize those techs in Africa and the Middle East.
So they're orchestrators, in a way.
Dr. Ghamari sees them as natural orchestrators of a truly multipolar tech landscape. They can capitalize on long-standing trade relationships and, deep cultural understanding.
Yeah.
That's something investors focused primarily on the West might struggle to replicate.
Right. It paints a picture of them being incredibly adaptable, globally speaking. Now, all this is happening at a really significant time because, as Dr. Ghamari points out, there's currently a bit of a contraction in global tech funding overall.
That's right. If we look at the broader scene, global early-stage tech funding has seen a downturn. There are a few reasons.
Like what?
The lingering effects of the pandemic, company valuations being reset, higher interest rates making capital more expensive, and just ongoing geopolitical uncertainties. It's all made traditional players a bit more cautious.
And the result is good startups struggling to find cash.
That's the consequence, yeah. Many really promising startups, even in critical sectors, are facing a genuine shortage of funding. It's not that the good ideas have dried up.
It's the capital that's scarce.
The capital to bring them to fruition is harder to find.
And this is the opportunity.
That's the critical point for you to grasp. It's not a fundamental lack of innovation. It's more a scarcity of that patient, strategic capital. And that's precisely the kind GCC family offices are, as we've discussed, uniquely equipped to provide.
So this market shift, this dislocation, it creates a window for them.
A significant window of opportunity for them to step in and, frankly, play a crucial role.
And Dr. Ghamari gives specific examples of underfunded areas that really align with GCC interests, right? AI is one, but not just any AI.
Right. The emphasis is on applied AI solutions, things with practical use cases for the region. We're talking about developing local language models for Arabic, maybe.
Okay.
AI chips designed for better energy efficiency, crucial in that climate. AI to optimize complex supply chains, privacy-preserving AI that respects local data rules. It's about tackling real challenges.
Not just chasing hype. Climate tech is another obvious one for arid nations.
Absolutely. Given the region's environmental challenges, this is key. Think advancements in carbon capture, next-gen desalination for water security, high-efficiency solar power adapted for deserts.
Right.
Even sustainable agriculture tech that can work in those conditions. These are areas of direct, pressing need.
He also mentioned digital health tailored for the Minau region's demographics.
Yeah, looking at personalized genomics for regional populations, platforms to manage common chronic diseases there, telehealth infrastructure to reach diverse communities, and health data systems that really prioritize privacy and cultural nuances.
Makes sense. And cybersecurity, data sovereignty, always important, but maybe even more so now.
Definitely. Investing in robust security like zero trust frameworks, developing privacy networks specific to the Middle East, secure digital identity solutions, it's all critical for protecting national infrastructure and data.
And finally, he touched on some really long-term bets, quantum computing, space tech.
Yeah, these are the truly ambitious long-horizon investments, but they're potentially vital for long-term strategic independence.
Like what specifically?
Funding research in quantum-resistant encryption, maybe establishing sovereign digital capabilities through space assets, developing orbital communication networks, advancing satellite tech, big picture stuff.
It really underlines Dr. Ghamari's point, doesn't it? The missing piece isn't innovation, it's that long-term conviction to fund things through the current uncertainty.
Exactly. A conviction that GCC family offices, with their patient capital, are well-positioned to provide.
Okay, so we've explored why they're well-positioned. But to really seize this moment, Dr. Ghamari argues they need to maybe rethink how they invest. It's not just about having the money.
Right. If we look at how they can best leverage their position, it's about moving beyond being just passive allocators of capital. They need more sophisticated, more agile strategies.
And one key area he emphasizes is thematic capital allocation. What does that mean practically?
Basically, it signifies a shift away from sort of generalist investing towards a more targeted, thesis-driven approach. Dr. Ghamari suggests creating dedicated investment vehicles, maybe special purpose vehicles, SPVs, or smaller focused microfunds built around specific innovation themes.
Themes that align with global trends but also regional needs.
Precisely, aligning with both.
He gave some cool examples like AI specifically for Islamic finance.
Yeah, or tech focused on climate resilience for arid nations.
Yeah.
Think AI tools ensuring Sharia compliance and financial models, or investing in tech for water management and desert restoration.
What else?
Other examples. Maybe blockchain for secure digital identity in regions with stateless populations. Ed tech tailored for Arabic literacy and STEM skills. Even space tech for regional satellite sovereignty.
And the benefit of being so focused.
Well, it kind of de-risks the capital because you build focused expertise. It allows for building strategic influence in key areas, attracting specialized talent, deeper partnerships, and potentially more agile decision-making within that theme.
Got it. The second strategic shift he mentions is operational engagement. This sounds like getting more hands-on.
Exactly. Moving beyond just writing the check, it's about evolving into more active participants in the ventures they back.
How would that look?
Could involve setting up internal innovation labs, maybe creating talent incubator programs, building strong founder networks. The goal is to reduce reliance on external firms and embed the family office's vision more directly.
He had that example of an Abu Dhabi office co-building a telemedicine startup.
Right. And what's insightful there is how they did it. They used their own network for pilot markets, recruited local talent, helped scale it across Africa.
So they really shaped it.
Very much so. Retaining influence, building proprietary IP, it's a much more involved approach than traditional VC often takes.
Okay. And the final aspect of this evolution, governance and ESG, environmental social governance.
Yes. And what's important to understand, especially in the GCC context, is that ESG isn't just about ticking compliance boxes. It can be a real differentiator, a way to enhance value. Well, investment funds that align with Sharia principles show measurable positive impact and prioritize sustainability. They can attract significant global ethical investment capital. There's a growing pool of that.
And Dr. Ghamari connects ESG back to core GCC values, like stewardship.
Exactly. Stewardship of resources, community well-being, legacy. These concepts resonate deeply. By integrating these values, family offices ensure they're not just making money, but also contributing positively to society and the environment.
Which aligns with that long-term intergenerational view we talked about.
Perfectly.
This leads to a really thought-provoking idea from Dr. Ghamari, capital as culture. The idea that whoever funds tech shapes its values.
It's a profound point. It raises a big question for all of us, really. What kind of future are we building through technology?
And GCC family offices have a chance to influence that.
A unique opportunity, yes. To influence the trajectory by backing tech that resonates with their values, their cultural context.
He gave examples like AI models built on more diverse cultural insights, not just Western data.
It's exactly. Or fintech designed to empower underserved communities in their regions. Web3 platforms that prioritize digital sovereignty.
He calls it strategic moral engineering.
Which sounds intense, but it's about consciously directing investment towards tech that fosters regional stability, respects cultural heritage, promotes global inclusion.
And this is also a form of soft power.
Absolutely. It can cultivate goodwill, strengthen long-term influence globally. It's not just philanthropy, it's strategic.
Okay, wrapping up, Dr. Ghamari offers some practical guidance, almost like an FAQ for GCC family offices getting deeper into tech. He stresses why now is a good time.
Yes. Emphasizing the market dislocation offers potentially more favorable valuations right now. It's an opportune entry point.
And he flags high alignment sectors again.
Right. Climate tech, cybersecurity, localized AI, precision health, halal fintech, smart infrastructure things, clearly linked to those national visions we discussed.
He also recaps the unique strengths of their capital.
Flexibility, potentially rapid decisions, that long-term focus, deep understanding of MENA South Asian markets.
Yeah.
These are key differentiators.
What about structuring deals, especially with Islamic finance?
He mentions specific structures like musharaka profit sharing or mudaraba trust financing and ijara leasing as effective models for tech ventures, ensuring compliance.
And looking beyond Silicon Valley.
Yeah, he points to emerging global tech hubs, places like Bangalore, Riyadh, Dubai, Nairobi, Lisbon, Singapore, Tel Aviv, Tallinn, offering diverse opportunities.
He also touches on asset tokenization.
As a way to potentially improve liquidity, broaden access, maybe streamline cross-border deals, and crucially, the need to monitor global regulatory shifts.
Like data sovereignty rules?
Data sovereignty, AI regulation, digital identity standards, ESG disclosure requirements.
Yeah.
Keeping an eye on all that is vital.
And he reiterates ESG isn't about sacrificing returns.
No, he frames ESG as a driver of long-term value. It's about supporting ethical, sustainable business models that are built to last.
But he also warns about geopolitical risks.
Definitely. Cross-border deals have complexities. U.S.-China tensions, export control, sanctions, IP security, due diligence is paramount.
And finally, the need to institutionalize this, not just ad hoc deals.
Right. Building dedicated teams, having clear mandates, maybe evergreen investment vehicles, succession planning, formalizing the innovation strategy ensures long-term commitment and impact.
So as we wrap up this deep dive, it feels pretty clear that GCC family offices stepping up in global tech. It's not just a minor trend.
No, it's a really significant force. It has the potential to genuinely shape the next wave of tech innovation globally.
The key takeaways for you listening really are understanding their unique advantages, that long-term view, the national alignment, the geoeconomic position.
Absolutely. And seeing the current landscape as an opportunity for them, plus how they're evolving their strategies, becoming more thematic, more operationally involved, more values-driven.
Which brings us to our final thought for you to chew on. Consider the broader implications here. What does it mean when capital with this kind of long-term vision and these perhaps more culturally diverse values starts playing a bigger role in shaping our technology?
It really prompts you to think about the values baked into the tech we all use every day and who ultimately gets to shape them.
A really fascinating area to watch. Thanks for taking this deep dive with us.